Home prices in most Canadian real estate markets have yet to see any sort of meaningful impact from the COVID-19 pandemic. Right now, though, is this the beginning of the Canadian real estate crisis? Have we just hit the tip of the iceberg? Because mortgage arrears rates, those are mortgages that are 90 days or more behind, are starting to creep up. The Bank of Canada has a report out projecting that they will be double what they were in the 2008 crisis later next year. And 20% of Canadian households don't have 2 months of mortgage payments saved up. Will low interest rates, which are right now at all-time lows, and a reduced stress test be enough to keep prices where they are and the Canadian real estate market afloat? We're going to go over all that and more on this episode of Prairie Real Estate. Hey guys, welcome back to Prairie Real Estate. My name is Matthew Pfeiffer. I'm a real estate agent in Regina, Saskatchewan. Now, if you like this sort of content, real estate news, market updates, all those tips and tricks I've got for you, go ahead, hit that like and subscribe button right now. I really appreciate all the support you guys have been giving me. Thank you very much. Now, what do you get from a pampered cow? Well, you get spoiled milk, of course. Hey guys, if you guys are watching this when I first posted, it's the May long weekend. I hope you guys are enjoying your long weekend, trying to get out, have some fun. I know it's tough. You can't maybe spend as much time at the lake or with family and friends. That's what I'd like to be doing normally on this weekend, but we can't do that. So instead, I'm gonna try to get out on my bicycle, get a little bit of a ride in and get some work done. If you wanted to know a little bit more about me personally, I'm gonna put my Instagram handle right here. You can go ahead and follow me. Not much for business on there. It's mostly just personal stuff like my coaching life, astronomy, cycling, those kind of nerdy things that I like to do. But go ahead, you can follow me and kind of learn a little bit more about me. So this episode of Prairie Real Estate is giving me more one of those informal real estate ramblings. So I want to go through a couple of news topics here. A couple of ones we're going to go over here. First and foremost is mortgage rates are in arrears. Those are starting to creep up a little bit, and the Bank of Canada is projecting those to go even higher. Secondly, we're going to talk about where current mortgage rates are right now and a possible small reduction in the stress test, allowing you to purchase a little bit more of a house. And the third thing I've got kind of a bonus tip that I think is going to be really, really important for buyers going forward is some of the new programs that are available through a few of the different lenders. And these are cashback programs at low interest rates for things like small renovations and repairs. So we're going to have all that and more on this episode. Okay, let's get into it here. First topic. So what I want to go over here is mortgages that are in arrears. So for those of you that don't know, a mortgage in arrear is a mortgage that has not been paid for at least 90 days. And these things get reported and tracked by government, CMHC, Stats Canada, etc. Why that's important is obviously people that are behind on their mortgage or in danger of losing their house to foreclosures. Right now, those rates have started to creep up a little bit, and there's a new report out from the Bank of Canada that they expect those mortgages in arrears rates to be double what they were in the 2008 crisis later on next year. That's a pretty scary headline, and I can see it already in the comments because people have been telling me for an awfully long time how wrong I am about the real estate market and the crash is near. Hold up one second here. I want to talk a little bit more about reality and not just the headline. The Bank of Canada is projecting those mortgages and arrears rates to go up to 0.8%. 0.8% of all mortgages may be ending up in an arrears state by the middle of 2021. What does that give you in context to say another situation like the 2008 mortgage crisis in the United States? Just before that market crash, their mortgage arrears rate was 3.5%, or 5 times higher than what the Bank of Canada is projecting right now. So yes, this is not good when people are behind on their mortgages. Yes, this will cause some people to have to sell their house at a lower price or end up in a foreclosure situation. But those headlines are a lot scarier than the potential reality. 0.8% of all mortgages, significantly lower than even the worst times in Canadian history. The 1990s recession is a really good example. That again, too, people around 3% mortgage arrears rates. So yes, the headline sounds scary, but the reality isn't quite as scary as the headline. Next is a little update on the Canadian mortgage stress test. Again, if you don't know what that is, that's a qualifying rate. You have to qualify at 2 full points, or in this case, it's now maybe potentially going to go down to 5.04%. You have to qualify on that in order to qualify for a mortgage. What they're trying to do is see if interest rates go up, is a buyer able to withstand those higher interest rates? Now, that started the year at 5.19%. It's gone through a couple of drops now. It looks like it might actually drop here potentially below 5% at 4.99. Now, this is not a massive change here. For an average buyer, it's going to allow you to spend a couple $1,000s more. It's not a significant amount, But anytime that starts to come down a little bit, closer in line with where current mortgage rates are, that is better for people who are going to purchase because they can spend a little bit more money. This is really only going to help people that are on the absolute razor's edge of being able to afford a house or not be able to afford a house. And while we're talking mortgages here, I want to talk quickly about where mortgage rates are at. Ever since this COVID-19 pandemic has hit us, mortgage rates have gone all over the place, up, down, sideways, you name it. It's tough to even talk to people about mortgage rates because they're changing so much so fast. New programs are coming in and out. We'll talk a little bit more about that later on. As we're chatting here, I'm going to scroll through some of the mortgage rates, but what you're seeing is all the big banks are around 2.59%. The mono lenders are kicking around about 2.45%, and that is May 15th here, May long weekend. So there's some great rates out there. If you are in the market, you are looking to buy, go talk to your bank or mortgage broker right now and get on those great mortgage rates, get those locked in because these are fantastic rates, going to make those houses even more affordable. Okay, bonus topic time. And so what I want to talk about here is some of the new programs that are being put out by a few of the different lenders. So these are cashback programs designed as allowing you to be able to do small improvements or repairs on a house when you've bought it. This is a little bit different than the Mortgage Plus Improvements program you may be aware of. So that is, you're buying a house for say $300,000, you end up extending that mortgage to say $325,000 in order to do some renovations on the house. The problem with the Mortgage Plus Improvements program is you have to have the money up front to be able to do those repairs, and then it's reimbursed. As well, if you sell the house before the mortgage is paid out, they make you pay out that Mortgage Plus Improvements right off the bat. But these new cashback programs are structured a little bit differently. They're not designed for major renovations. They're designed for smaller things like fixing an AC unit that's fallen apart, a furnace that's on its last legs, and you can actually even use them as a little bit of a debt consolidation to pay down some credit card debt, things like that. So what you can do is get these cashback programs with their low interest rates, and they give you the money up front. So if you have to replace that furnace, you can do that. A lot of first-time buyers who have really scraped together every single dollar they've got in order just to have the down payment, cover legal fees, etc. This is really good for those types of buyers because I get it. You probably don't have a lot of extra cash, $5,000 to fix a furnace kicking around. So a program like this is fantastic. It's a lower interest rate, and it's prorated if you sell the house before you've got the mortgage paid out. So you're not paying a substantial amount to get out of the house and you sell it. As well, unlike some of the Mortgage Plus Improvements or some of the cashback programs of years past, it actually isn't going to cost you more money than the amount of money you're borrowing. Some of those programs before, if you're borrowing $5,000, it might cost you $8,000, $9,000, $10,000 to borrow it. Really wasn't a good situation to be doing that. I understood if you had to do it, you had to do it. These programs are a lot better. So if you're in a position, especially as a first-time home buyer, and you want to get access to one of these programs, talk to your mortgage broker, your lender. These programs are really good. They're going to help you do those small little repairs around a house when you're buying it. So if this is your first time checking out Bald Prairie Real Estate, thank you for stopping by. I appreciate it. I hope I was able to give you some information that you found valuable. If you want to know more about, say, being a first-time home buyer, I've got a whole series of videos. I'm going to have them right here that go over first-time home buyer topics. But if you just want to know more about the real estate market, what's going on, what's the latest market stats, I've got my most recent video right here. You can check it out. Plus, I'm going to set it up as a playlist so you can go through and see where the real estate market has been and how it's progressing forward through the years. Thanks a lot for watching, guys. Enjoy your long weekend.